Welcome back. In this lesson, I'm going to explain how to trade the news. Now, news in the Forex market can shift the momentum of the market drastically and very quickly. As a trader, you should be very careful with the news because it can be manipulative. Now, currencies in the Forex market can be manipulated by central banks, by governments, by other participants in trading. Before the news with the high impact gets released, the market may already be impacted. So let's use an example of how you can trade the news. If the upcoming event is at 3 p.m. and is the unemployment rate report, and the current time is 2:55 p.m., well, the market will start to be more volatile and currency pairs can be less liquid, which means it's unstable and unpredictable. Now, this would impact the spreads too, making them wider because of that volatility in the market. So the ideal scenario, if you should trade the news, is to focus only on the technical analysis or the fundamental analysis aspects. But what if we combined both technical and fundamental analyses to trade the Forex market during the news? I'll share some examples where you can learn to trade the news. However, do remember that Forex is unpredictable during the news, so the risk ratio is much higher. Okay, the example I'm showing here is using technical analysis to analyze a currency pair. For example, say you spot in the market a double top pattern which has formed the second top already, and resistance is a strong zone, so the price has started to fall. You also spot a supply zone that's acting as a strong zone. So now you have three technical analysis indicators: the double top pattern, the resistance, and a supply zone. If you sell the currency pair euro against the US dollar at 1.12500, some hours or even a day before the news for that currency pair is released, your trade would also go in profit because your analysis was correct. Then, a few minutes before the news is actually published, you can check the market more often, then continue with the next step. Now, since you're in profit, you have two alternatives. Now, from my experience, the first alternative is to close the euro against the US dollar trade by not risking the trade before the upcoming report of the unemployment rate getting published. So, you close that trade in profit and you're not going to risk the trade, which could change direction from the profit to a loss. And that's really because of risky economic events. Now, the second alternative is to trade the news by securing your trades with a stop loss. If the trade that you've opened is currently in profit, you can move the stop loss price to a profitable zone. For example, if you have the euro against the US dollar pair on a sell since 1.1250 price, well, and the current price of the euro against the US dollar is at 1.11800, then you could move the stop loss to 1.11900, for example, or in a different price value. When the unemployment rate then gets released, and if the news report shifts the price of the market against your direction, then your trade would automatically close around 1.11900 level. And your trade would still be closed in a profit, even if you've traded on the news and that news report went against your analysis. The two alternatives I showed are the safest if you have open trades in the market, which are in profit. However, you can also trade the news when you don't have trades in profit. But trading just before or after the news release is something that only risky traders do. So if you're not as familiar with trading as I am, I would not risk it. The two examples and alternatives I presented really are the safest options from my experience. I highly suggest you trade news first on a demo account. Once you've completed this course, you can see how the market reacts during the news. And this will allow you to be prepared on how to act and how to understand the market and how it reacts before, during, and after a news release. So that's the end of this lesson and the end of the fundamental analysis category in general. Let's continue to the next lesson.